last couple of days, we've seen some compression in the volatility in the market. In particular, 2 days ago, when that started, there was some, can't see it in the 30-minute chart right now, but there's some wild wicks on the SPY that made it difficult to trade. But the theme that really, the overarching theme, and I think I've touched upon this a couple of times already, is since we had this meltdown here, and then the bounce the next day, the market continues to make higher lows. Every one of these pullbacks just gets bought higher and higher. And we know what that means. When buyers step up, and we know exactly where the sellers are, that sets us up for a leg higher. And so, you know, when I say it's 90-10 chance we're going to break to the upside, no, but it's definitely better than 60-40, I would say now. So as you get a compression, you wait for the kind of the strong break above. And then I'm usually conservative on these things, but at a minimum 268. If this happens, yes, tomorrow. The other thing is tomorrow's Friday, options expiration. It's a perfect opportunity, especially if you have a little bit of weakness on the open tomorrow, to buy some like some 268 calls, maybe even some 269s.
AMRS disclosing a warrant exercise in it.
If things go crazy into the close, meaning it comes back up into this area here. Remember this day here was, I don't know if this was the Fed day, there was something here, I think it was a Fed day, where we took out the highs, we went up to kind of where this down move started from 273, and then it was a straight shot over the next 2 days, 258. And that's why we play for a bounce here, right? Because we went from like down 15 points in a couple of days. And you got the bounce, didn't quite get back up to here, made the lower, took out the lows, then chances for more downside continued. But since then, since this move right here, which was pretty bearish, there's just been a compression of volatility and higher lows. And so you can see the compression starting here. And in the last couple of days, it's just getting tighter and tighter. Despite negative news flow. I mean, there's just been some negative news flow. And, you know, we gapped down this day here. We played this on the short side. And this was this is a very good down move. But gapped up the next day, erased the down move. There was some end of the day selling, but what happened the next day? We gapped up, we held. What happened yesterday? Small gap down, immediately bought. So we're being bought on the open almost every morning. You know, this is the open right here up. This is the open, we gap up, we hold. Yesterday, gap down, open, bought. So regardless of whether or not we're gapping up or down, right on the open, buyers have been stepping in for the last week. So we'll continue to watch that. And I might add, 2 days ago when things were really tough and the volatility tightened, even this middle of the day at noon, we had this ridiculously hard down move, relatively speaking, for the compressed volatility, and it was scooped right back up. And then there was 2 more wicks. You can see it on the 30-minute here. This wick here and this wick here. And it's almost like the market making programs still are not giving a lot of liquidity. And so if a seller comes in, they'll let it drop $1, $1.50. But once that selling order is done, boom, we're right back up where we started or higher. And so, you know, that's all of those things point to me to more bullishness. Obviously, we're seeing some market leaders like Facebook. After we watched that for a while, consolidating just below 160, break to the upside and go up $10. And so these, you know, we're seeing more bullish things. What we want to look for today is, do we hold above 264, another higher low? And if the first move is up, we go to 266, we don't want to go crazy here just chasing. But we want to see, okay, does it shallow pullback? Does it hold again? And we continue with an uptrend? And you want to play that on the long side, and you want to be in a position just in case we close above 266 today and they gap us up tomorrow and we run. You want to be in a position to take advantage of that. On IWM, so we are above this area now here, the 150, kind of 380 to 154. to confirm that this is going to fill and we'll work our way back up to 156, 157. We want to see any type of move above 154 and a half and hold above there. So let's be a little bit more conservative. Let's say above 154.60. So some sort of move into here, consolidate and hold up here. And then you'd look for the upside break to here, to here. I would think this would be shortable, very shortable. 170, 157 and a half to 158, especially if we got there in the next couple of days. So anytime you have like a big quick move like that, you just look for a pullback. All right. So triple BY, I did buy a little bit of this in the after hours. I'll show you why I did. It's not looking good today. I got out of it was only a few shares. I got out of most of it. I bought in front of 18 and a half. So what we've seen since the last year is each quarter it's just gapping down, gapping down. I thought maybe this was going to be the kind of crescendo where the numbers came out, the guidance was weak. It would flush down through this prior low here, and then we'd get the bounce back up to $20 or something like that. But a lot of downgrades. The price targets have been lowered between the range of 16 to 20, which is not great. I mean, it's sitting basically in the middle of the price targets that I've seen. And normally in these situations, you kind of hope like the price targets were here, and then they bring them down to here. And if the stock is here, you're like, okay, you have something to work with. And you can see pretty clearly it was a $40 stock about a year ago. And then, gap down on earnings, gap down on earnings. I guess last quarter it gapped down, but they bought it. This quarter, we'll see. It's gapping down right now below 1850. Let's zoom in. Again, this is more, they're still making plenty of money. They brought down the numbers. I think it's between 2 and 250 a share. So quickly in your head, you can do that. That's below a 10 PE ratio, which obviously in this market is extreme discount to the market, probably like a 50% discount to the market. But it's really just the question of, do people believe that those numbers will stay, will they hit those numbers, or are those, is it a Cole situation where it goes from 2 to 250 now in 6 months, they're going to say $1.50 to 2 and then $1 to $1.50. And all of a sudden it doesn't look as cheap. And it's going to come down to the betting of the large, hedge funds. Do they believe those numbers are going to stabilize? And if they do, they'll start accumulating it, and you'll see over the next few months, it'll work its way back into the low 20s. So let's go. So you can kind of see what happened. The initial down move took it to 1850. It looked like it was bottom there. I bought it, and then it held here. It looked okay. It got back up, couldn't get above 19, and then it just kind of closed at 1850. So below that, I mean, obviously this is the first spot. If it does try to bounce 1850 and then into 19, you have to play that for a failure at one of those two prices if we do get a bounce, just initially, and then we'll kind of see. On the downside, it's going to be tough. I mean, if I see a good spot where there's a huge ton of selling and it's having trouble, give it a shot on the short side, but it's tough because of how beaten down it is already. Not to say it can't get to $17, but I think it could potentially be a tougher short. Certainly holding below 18 takes out the pre-market low. You want to see what happens. There'll probably be some bids at 1750. The next one is DAL. And so numbers look good to me, but just noticing the sector, I punched up UAL and AL, and they've kind of been getting hit the last few days. You can see this is still marked up from the last time we talked about it. This did seem kind of crazy here, but once it got back down below 58, I feel like I shorted one of these moves. I can't recall. Maybe it was this day here, and then it came right back up. Maybe I shorted the pop back up to 57. So Looking at it this morning, the bid right now is here. So it's above this. Okay, so this gives you a good idea. So got hammered. This is probably was a big market day. 54 and a half came off hard, then gap back above 52 and a half. It held there 3 of the next 4 days, 4, and then finally got below, and then popped that, and that held. So 52 and a half is really an important price. Reminds me actually of 157 in Facebook from the other day. Just people realize, it got above, it held, and then had a nice run back up to 54, came back down, held, popped up $1, held it again. The next morning gapped above, and once it got below, it was a good short on the retracement. It was a short the next year at that price, so it's a really important price. In fact, I'll put that as an inflection on the sheet. So do people recognize in the pre-market it's important? It looks like it. So the bids are trying to hold here. If it holds here on the open and gets above 53, you can look for a play up to 54. If it fails at 53 here and comes down through 52 and a half, play it something like that. That's how I'm looking at it for today. In the back of my mind is the fact that the sector is acting so weak. So, yeah, so that it gets below 52 and a half, playing it down to yesterday's low for the gap fill. Netflix. So Netflix was real strong on the open yesterday. Got to our R2 right on the open, and then this is a pretty good short setup. So it got to our R2, which was here. I'm gonna see I drew that in the morning meeting. If it comes back down here to this, like getting long makes sense. So this was the original top here at 10 o'clock. As another leg up, getting long into this on a stock that's trending higher right here, that's fine. The problem was when I made the lower high here and couldn't get above 310. Obviously enough room there for you to take some profits and cover the risk. And it held here again, but then it makes another lower high at 308.50. And then the sellers just started to take control. And as Tesla and Netflix and some of these momentum stocks often do, as strong as it was in the morning and a ton of people were accumulating it, they punished those people right up to the close. Of course, anybody who held is rewarded with a move right back to 310 this morning. So it does look like people are willing to buy this into earnings, which gets us to think about how people are being positioned. So if the numbers aren't that impressive, we need to remember that for Monday after the close and Tuesday. For today, I would think 308 would be the spot where I would expect people to step in if they were going to buy. And then any type of consolidation, like a tight consolidation above 310, if you wanted to play that for an upside break to 312, 313, that would be fine. Just it needs to be a pretty tight consolidation, so the risk in the stock. Tight consolidation in Netflix is probably around 50-cent range. HLT. This ended up going up much more than I thought it would. So again, and that was based on, they had to price this deal, I think it was 73, they priced the secondary. If you ask me best case, shorting into 79, the 79.30, I would think this would work most times. In this case, it got up to 79.30 and actually started to hold above there, which I imagine maybe some people, except for this wick out to 79, some people got long into this very tight consolidation. It came down to 79 again, which I'm sure shook some people out who are trading it as a relative strength play. And then did go to 80, or actually above 80. So I would just say I'm really impressed by that. It's, sometimes things do very low probability things, but it is a game of probabilities. And, for whatever reason, it went down, I guess, too much, and the people who got it on the secondary at 73, they kind of got shafted. The people who sold, the people who bought, that's good. They got it at a good price. Yeah, I mean, with the strength, I would say if it does actually take out 80-50, and then you have the next resistance right here. There isn't really a great long play anymore from a risk reward. That play was really, he started to believe when it got above 78 or moved to 79.30. So I would just look to see if right on the open it goes up and then you see it come off really hard like this, and then comes up here and then fails at 80. You could probably make a trade back down to 78, 78 and a half, something like that. Not going to be at the top of my list, but I will put some alerts in. Check back into the spot and see what we're doing here. So buyers in control. So right on the open, we'll watch if it flushes right below 265 and then gets back above 265 and a quarter. Buyers are in control. And I'll just quickly check in Best Buy. So it looks like they're going to at least test this 18 on the open, and then we'll kind of see. And then also the other thing is with it being down more than 10%, there's issues there, especially if our firm gets net short, then I can't get out of a long sometimes, which is a pain in the ass. And also, so you can't hit the bids because of the silliness that they put the uptick rule back into effect after the financial crisis, which is a whole other story of how it distorts trading. And it's not good, obviously, for the market. But you can see it's tight. It's getting tighter. So if first move is up to here, and it comes back down quickly, and there's actually buyers in front of 18, then you can think about it bouncing to 19. But if first move is up, and it's pretty weak, comes down quickly, they buy a little bit, but it can't bounce, and it gets below 18, that's kind of the short play. But it would be, as I said, the risk reward I don't think is as good on the short side. Although, with all the negativity, it might not really have much of a bounce either. So it is liquid. It'll trade. It's going to trade over 10 million shares today.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.